If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Now imagine this, a state-run newspaper in China called Economic Daily has just given NIO the thumbs up on battery swapping. That's right, this influential newspaper is not just singing praises, but it's also saying that it's unwise to turn a blind eye to battery swapping. And obviously the battery swapping revolution is led by yours truly, NIO. Now, NIO has been making waves recently. Just last week, they signed a partnership deal for battery swapping with Chang'an Automotive, and the collaboration marks a pivotal moment for NIO, opening the doors for many other players to join in on their battery swapping technology. Who wouldn't want an invitation to that party? To shed light on this endorsement, we turn to Economic Daily commentator Yang Zongying, who penned this article on November 24th. Yang emphasizes that this move by NIO is a direct response to those who have been downplaying battery swapping. Now let's address the elephant in the room. Some skeptics call the battery swapping model expensive and inefficient. They point to the high construction cost of the battery swapping stations, which can soar over $1 million RMB, making traditional charging seem like the better route. But hold on, folks, NIO, who's often criticized for not having a clear future, is challenging these notions. The article lists mainstream bearish views but also highlights some critical points. Mainly that any business model can be sustainable if it's profitable. The key here lies in economies of scale. The article suggests that companies should join forces to standardize batteries and battery swapping specifications. This in turn would create a scale effect, making the battery swap model more viable. But now let's talk about the unsung advantages of using the battery swap model. It's not just about comparing the operating cost, it's about utilization. The article suggests that the advantages of using the battery swap models are oftentimes underestimated. Shorter waiting times, reduced vehicle purchasing cost, and less floor space. These are all some of the factors that play into the battery swapping model's strengths. As we witness a rapid rise into the adoption of new energy vehicles, the article concludes with a very strong point. It's not wise to blindly downplay the battery swapping model. Could this be the beginning? So NIO, the trailblazer in the electric vehicle market, is making strategic moves to expand its reach and customer base. According to recent local reports, they've embarked on an innovative partnership with the used car dealer, which a lot of people refer to as the Vroom of China, UXIN. The goal is to revolutionize sales channels and give themselves more exposure. So what's the scoop here? NIO is now showcasing its innovative products at UXIN's offline dealerships. This is a move that echoes the concept of NIO Post, which is a lighter store format which is designed to provide a unique customer experience. So what does this mean for NIO enthusiasts? Picture this, model displays, test drives, and a focus on the ET5, EC6, and ET7, all conveniently laid out at UXIN's offline stores. NIO employees will be on site offering a more personalized touch to the experience as well. The partnership stems from a robust relationship between NIO and UXIN, as, like I said, we've documented kind of well on this channel. We've mentioned that UXIN received funding from Joy Capital and NIO Capital in the past, and that kind of cements their collaboration. Even CEO and co-founder William Li sits on the board at UXIN. Now let's address a challenge that NIO faces, which is sales concentration in first-tier cities. To tackle this, NIO is spreading its wings. Even though NIO has plans to lay off a broader 10% of their workforce, they're also at the same time doing this move which expands their sales network. And it doesn't stop there, NIO's reaching beyond Tier 1 cities by introducing the NIO Post program. Lightweight displays in high traffic areas, product demonstrations, and test drives aim to enhance brand exposure and generate sales leads. As NIO targets Tier 3 and below cities, their sales network continues to expand. In big cities, NIO houses and NIO Posts will complement this strategy. But obviously, in lower tier cities, NIO Post takes the center stage. But what about the numbers? Well, NIO delivered 16,000 vehicles in October alone, which marked a significant year-over-year increase for the company. The company's relentless pursuit of growth is clearly evident here, and it shows in their plans to report their unaudited financial report for the third quarter. For all NIO enthusiasts out there, this is an exciting chapter. As the company diversifies its horizons and expands its sales network, the journey into the future of electric vehicles becomes more thrilling for them. Today is all about the power play between NIO and Geely, two giants making waves in the electric vehicle industry. Geely, the second company to team up with NIO after Chang'an, brings not just technology but also deep pockets to the collaboration. Geely is doing revenues in the billions. So why is NIO pairing up with Geely and Chang'an for battery swapping and allowing them to use their technology? Aside from both of their impressive financial stature, both of these companies have a deep interest in exploring new frontiers when it comes to new energy vehicles. And in this race for the future, they're betting on the swapping model. The beauty in this collaboration lies in the potential for synergy. With NIO already boasting the largest public charging network infrastructure in China, Geely and Chang'an can tap into this infrastructure for a smoother entrance into the battery replacement arena, but also making things more convenient for their customers. As the saying goes, it's better to work together to stay warm than to freeze in the cold alone. But let's not forget the challenges that NIO faced expanding its power swapping network. Low utilization rates and obviously the ever-present specter of some serious financial losses. The need to open more charging piles has become pretty crucial here. President Shen Fei says that as long as they can handle 50 to 60 swaps per day, then they can break even. However, the cavalry seems to arrive in the form of Geely and Chang'an. Their collaboration seems to inject a sense of confidence into NIO's future. Now NIO seems to simultaneously promote two types of power swaps, an exclusive one for only NIO users, and then another one for third-party players who are sharing their technology like Geely and Chang'an. But here's the real kicker. President Qin Li Hong emphasizes the value beyond the balance sheet. He says, if I count the income from service fees alone, then I could definitely lose money on this line, but it allows users across the country to buy electric vehicles with confidence, and this is some value that's hard to measure. So everyone, as we witness this partnership unraveling between Geely and NIO, it's not just about batteries and charging stations, it's about creating a sustainable future and driving more sales of electric vehicles in turn. A future where value goes beyond dollars and cents on a financial report that pops up in the short term. Long-termism is still something of the focus here, because one day the charging infrastructure will start to break even. Just as long as NIO can amass enough people using their infrastructure, who do you think is going to benefit from that? Obviously NIO. So will the used car market in China be viable? That's a question that I need to make an attempt to answer, and they are one of the largest used car companies in China. So is the used car market in China staying stagnant? Is it declining? Is it increasing? Let's start with that question. Well, I made a video last time about this company, and in that I talked about that a little bit. I talked about how China wants their used car market to be a $306 billion market by 2025, which would be a 2x from what it is today. They hope to do so by financially incentivizing people and businesses. For one, if you buy a used car in China, you're going to pay 0.05% tax, as opposed to if you go and buy a new car, you're going to pay 17% tax. So you're financially incentivizing people to go buy the used car. And then on the other side, they're making it easier for dealers. Used cars without license plates are now categorized as commodities, except instead of assets, which make them easier for dealers to trade. So they're kind of putting a lot of policies in place to make sure that this market increases in size. Today, the market cap for UXIN is sitting at 364 million. Okay, so I just told you that China wants to make a $306 billion used car market by 2025, which would be a 2x from what it is today. So for a company who we say is an industry leader in used cars, of course, one of the largest used car companies, is it outrageous to say that this company can get a 10% market share of that used car market if it does reach 306 billion by 2025. I don't think so. I think that's a really conservative estimate. If they are able to do that, I think that puts them at $30.6 billion in revenue if that happens by 2025 or whenever it happens. So to me, this company is undervalued. That's how I justify it. There's obviously a lot of risk that comes with buying a company like this right now, of course. Their financials just are not strong right now. I addressed that in the last video that I did. So there's that risk of them going under or going bankrupt. And in my opinion, this is the result of them switching their business model and getting hit by the pandemic at the same time. They switched to completely online sales and they switched to a completely inventory owning model instead of sourcing their cars from third parties. But with the inventory owning model, they can obviously control the quality. So this makes this company very similar to something like a Vroom that we have in the US. So if you think a company like Vroom is going to succeed in the US and you are bullish on the used car market in China, this is basically saying, would a Vroom work over there in China? I believe so. If the used car market is going to increase in value and it's going to continue to increase, but we're going to get more into that in this video. We're going to see, we know what China wants it to be, 306 billion by 2025, but we're going to see, how far it's come and is it actually moving in the right direction. But of course, you need to ask yourself, will this company survive? There is a good chance of losing all your money in this investment. It is a speculative play and definitely not a short-term thing. I don't care what the share price is today. I care what the share price is going to be in 2025, maybe in 2030. We'll see how long I hold this thing. I do think that I'll hold it longer than 2025. So first I want to defer to a familiar face, NIO CEO William Li. He had some comments on the used car market in 2014. Here's what he said. China's used car market is rapidly growing, yet remains underserved. By ramping up the depth and variety of our used car inventory on Coach.com, the joint venture will ultimately help us better serve the market by providing used car buyers with easy access to the best selection of used cars available on the market when searching for the perfect cars. We are confident in this approach. We will further drive traffic to Coach.com, ensuring it remains the go-to website for used car listings in China. We also expect this joint venture to strengthen our existing competitive advantages in the used car industry by building our long-term used car strategy. We look forward to solidifying our position as a leading player in this used car market, to staying instrumental in driving forward the development of China's used car industry. So if you didn't know, William Li founded BitAuto. That was one of the companies that really put him on the map. He brought it to a really high valuation, ended up selling out of the company. But at this time, they were entering into a joint venture with UXIN and another company called Pengda Group. And William Li was very bullish on the used car market. So the rest is history. William Li is still very bullish on the used car market. We know this because in NIO, they recently launched their used car offerings. So from William Li's perspective, the used car market in China is going to be a big market in the future. And for those of you who didn't know, he was involved with UXIN in the past. The truth is that China's used car market is growing, and people might say, oh, people in China don't buy used cars. Well, that's not true. The data says otherwise. You can have an assumption, but you have to actually look at the data. So we are going to do that in this video, but I want to run some clips from the CEO of UXIN, Kun Dai, on CNBC. Okay, so the CEO actually goes on and explains the company's positioning as well as the market. So I'm going to run this clip now.
You're selling used cars in China.
Yes.
But you're raising money in the US.
Yeah.
Even though you don't sell used cars here in the United States.
Yeah.
Tell us about the decision to raise money here.
But I learned how to sell used car from the United States, right? Because when I was young, I very familiar with the CarMax, with the car auction, and Mayhem. That's all very successful company in the United States sell the used car. I think because China, our used car business just started from the year 2005. That's the first time we had a used car in the market. And so I think for that time, the US has already got 20 years, 30 years with the used car industry.
So the used car industry in China did not start until 2005. The US has about 30 years head start on China in terms of used cars. So in China, this is an emerging market. I think that the growth story is pretty good here. It's an attractive growth story to me, and that's why I ended up choosing this stock.
How many used cars are you selling a year in China? I mean, everything in China is big. We always say it's Texas big because you got 1.4 billion people. How many used cars are getting sold in China every year?
Last year, we sell more than 600,000 in China, yeah. And we achieved that number only used 6 years from zero. Yeah.
There's lots of, have you run into concerns about accounting standards? There's a lot of talk amongst investing groups in the United States that they worry about Chinese standards of accounting.
Right, I'm a little bit confused by that. It's accounting, I think we are counting all the numbers, financials, is under United States rules. And our accounting house was PwC, and I think they are familiar with the United States rules.
I guess my question is, on your roadshow, did you encounter a lot of questions about that because you're a Chinese company?
Oh, no. It's actually, because our business is very easier, and obviously we're selling car and we get the arbitrage from that. Yeah, that's an easy model. Right.
That was an awkward question to me, but as you can see, UXIN is audited by PricewaterhouseCoopers. Who else is audited by PricewaterhouseCoopers? NIO, Tesla, a bunch of other companies. So am I worried about UXIN's books? Not at all. And obviously I think that if there was something wrong with UXIN's books, it wouldn't be trading at $1, at just over $1. It would probably be trading a little bit higher. This is not one of those companies that a lot of people like to bring up. That's all I'll say about it. So earlier in the video, I mentioned that we were actually going to see if the used car industry, the used car market in China was growing or not. So let's head to Statista, because Statista has a lot of good information out there. I'm someone who likes to just come up with common sense investing ideas. So I'm going to look at Statista right now. So according to Statista, there was a 6-fold increase in used car sales from 2009 to 2019. There had been remarkable growth in demand for used cars in China. In 2019, the overall used car sales revenue amounted to approximately 953 billion RMB, which increased for the last 10 years from 148.8 RMB in 2009. Over 60% of used vehicles traded in 2018 had been passenger cars. Despite its steady growth, the second-hand car market in China accounts for only a proportion of the whole vehicle market. In 2019, almost 15 million used cars stood against 23.14 million registered new cars in China. Nonetheless, the second-hand vehicle market in China has vast potential. China has been the world's largest market for passenger cars since 2008, reaching a sales volume of approximately 23.71 million units in 2019. Average price of second-hand vehicles has increased to 60,000 RMB since 2017, and the trading volume for the e-commerce market for second-hand cars was forecasted to exceed 4.5 million units by 2021. So people can say whatever they want, but the used car market in China has been growing, and I believe that supported by government policy, it should grow even faster than it has been growing. UXIN is already a leader in the e-commerce space. As an investor, I only have 2 asks of the company. My first ask is that they get 10% market share of the used car market within the next decade. I think that's a very conservative ask. And then the next ask is that they make it through this cash crunch, which I also think is a conservative ask. Those 2 investors had given them 25 million. I talked about that in the last video too. So they have enough cash to last a quarter and some change. We'll see what happens moving forward. And then also the CEO kind of explained the viability of a company like UXIN. So I'll run that clip right now as well.
In China?
All right. We have several competitors there, such somebody they do the connector, the customer to customer, and but I think UXIN the model is very unique, because we focus on how to selling the used car from big city to the small city. In China, the problem is we have 800 million population that live in a small city. Yeah, even a city, small city with 500,000 population, they only have almost 100 local used car. Yeah, how to make customers, they can buy a satisfied used car when they live in that city. That's the key point and what UXIN we solved.
So you facilitate that market.
Exactly.
Is there also, as much as there is here, a trade-in type market? If you're buying a new car, would you trade your old car in?
Yeah.
And also financing. Are you in the financing business as well?
We're doing the financing business as well.
You are.
I think people doing the replacement in big cities such Shanghai and Beijing, yeah, because they buy the car 10 years ago, 8 years ago, they're currently the right time to replace the car. If they get a used car, the used car should be sold to the low-tier city because the people who living there, they do not have the sufficient income. They need a car.
So really, UXIN is catering to customers who cannot afford a newer car. And obviously this video is from 2018, but they ended up selling off their B2B unit. They're strictly B2C. They're strictly online, inventory owning, and they've made a lot of changes. Now we see if those changes pay off moving forward. So in regards to talking about NIO, I want to talk about the used car program again very briefly. So for starters, I read a Bloomberg article yesterday, and it said that China wants their used car market to be a $306 billion used car market by 2025, which would be a 2x from what it is today. So China wants to double the value of the second-hand vehicle market by 2025. Now, why was this interesting to me? Because I instantly thought about companies like Vroom, Carvana, and other things of that such that are happening here in America. But also when I think about it, if people do start saving money on buying secondhand cars, what happens with the rest of that money? Where does it go? It comes back into the economy. So I just wanted to research this and kind of see what connections could be made and if there's any type of opportunities to follow the policies that they're putting in place. The UXIN company, so we'll get to that a little bit later in this video, and obviously I'm American, so somebody please correct me down below in the comments if I'm pronouncing that incorrectly. So yes, like I mentioned, those used car companies in the US have been doing very well. So I wanted to know what the market would be like in China, considering that I'm invested in NIO, and NIO just made an investment into selling used cars, and their used car program has recently launched. I talked about that in a later video, so if you missed that, feel free to go through the channel and catch yourself up. So of the 270 million plus vehicles on the road today, only 15 million of those came from China's used car sales last year. That's about 5.5%. So if China's pushing an agenda for used cars and only 5.5% of the cars on the road are from last year's sales, then there has to be a lot of growth moving forward, is something that I instantly thought. So from knowing this, you can understand why NIO would want to make the investment into used cars. And of course, to incentivize used cars, the government cut taxes on them. So Beijing, where used cars used to be taxed at 3%, used car sales 3%, now they're actually 0.5%, as opposed to buying a new car, which is going to run you 17%. So any consumer who's financially savvy, which one will they pick? Will they pick to be taxed at 0.5%, or will they pick to be taxed at 17%? From this perspective, I put myself in the shoes of the consumer. I'm obviously going to go with the used car. After all, it's a depreciating asset. On top of that, China will classify used cars without license plates as commodities rather than assets, which makes it easier for dealers to trade. So many people wonder, why is China's used car market so small? Well, China's overall car market is pretty small. The government didn't start encouraging the sale ownership of private vehicles until basically 1984. So obviously in the US, cars go way back, to Henry Ford and the assembly line. So the US has a pretty rich history in cars, and other nations are pretty much ahead of China as well. So yes, we say China has the biggest EV market all the time, but don't let that fool you. China, and its population in Shanghai is about 24 million people. Of those 24 million people, 200,000 people get licenses every year. And of those 200,000 people that get licenses every year, only about 80,000 are able to afford a car. So the people who own cars in China is way smaller than around the world. Only 173 out of 1,000 people in China own a car. The market's still developing, but it's growing, and with that, the used car market should grow as well, given these incentives that the government is placing on used cars as well. The next reason that people typically haven't bought used cars, even though there's economic savings, according to Bloomberg, is because of cultural reasons. Getting a car in China culturally symbolizes that your family has arrived, so many people don't want to appear as if they've cheaped out on used cars. As time passes, we know that things change. Overspending on a new car is becoming less and less popular. People would rather do what makes more financial sense. So there's likely to be a lot of demand for used cars from everything that I've researched. Well, how do I make this information actionable? There's this used car company in China that a lot of people know called UXIN.
UXIN 二手车网上商城更省心，20万辆UXIN 认证好车，视频看车，315项检测，真实车况，30天包退，1年全国联保。UXIN 二手车网上商城大平台更省心。
It's super important that you do your own research and come to your own conclusions. This is a risky stock by way of market cap, but they really need to get this this online business that they switched to running and optimal. The numbers are just too small right now. Otherwise, they're going to have to raise capital again, and I do see them raising capital again. But I do also see them benefiting from the policies and regulations that China is putting in place in terms of used cars. And obviously, I think there's a lot of growth to come from that over the next decade. And of course, by 2025, they want to double the used car market in China and pretty much build it from scratch. So I do think that there is a lot of upside in a company like this. That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.